Hey guys, Frank Curzio here with another live video, and I'm going to cover John Deere today, which blew out the estimates, but I want to explain why this is so important for the entire market here. So let's look at John Deere. I'm going to go to my briefing.com site, share my screen, and this is from today. They give you updates all the time on briefing, which is a great site. So Deere beats by $1.32, beats revenue, provides 20, right, blowout. So earning at 257, beat by $1.32, everything's great. And then we see a stock price that, even you're looking at 6 months, whatever you want to look at. But anyway, I put a 5 year here. See right here? If you look at 5 year, the stock's trading at an all-time high, right? So when you look under the hood, though, this is a very interesting trend because I'm going to show you some statistics because what you're seeing is they beat. What they beat is the analyst estimates, and estimates were lowered so much that the company was going to be. It doesn't mean that they did great compared to last year, and here's what I'm talking about. So I'm going to bring up screen right here. I'm going to bring up a research report for you. There you go. Okay, so here's a research report from BMO, good firm. They just highlighting this from today. So 257 versus $1.26, huge beat, right? Huge. But sales fell 11%. They were projected to fall 25%. They only fell 11%, right? The stock's trading at all-time highs. So sales are down 11% year over year. They raised guidance a little bit, which, again, is a positive in this market. But look, management raises forecast for net income, implies earnings per share. Look at this, 710 versus 505 to 630. Look at the estimate. These are the analyst estimates and how wildly they were off, right? So it looks great. They beat the stock trading all-time high, but they're still doing worse than they did, and you'll see in past markets. And when you look under the hood here, agriculture and turf, their largest division, declining 10% year over year, right? 21 billion in sales. Next division, equipment revenue, down 12%. CF revenue fell 27%. So what are you seeing here? You're seeing every single segment of Deere declining year over year, right? Which is expected because of what we had with COVID. I get it, but should it be trading at an all-time high? Well, I don't know. Let's take a look at one other thing here. Because when I look at the numbers, and it's going to get updates from May, it's going to get updated a little bit better than this. But you're looking at revenue. Look what the company did here, 33, 34, and now 32, right? So lower revenue today than it was in 2018 and 2019, but yet it's trading at an all-time high. You're looking at earnings per share, basic earnings per share. You can do diluted, whatever you want. Here, this number right here, 1015, 881. It's probably a little bit higher than that, a little over 9. Still, they generate $10, and their margins were good. I'm not taking that away from the company, but as you could see with the stock, I mean, the numbers were much better here when the stock was at 170 than here, but it's trading at all-time high. Now, what does that mean? I'm not crapping on Deere here. What I'm saying is that the numbers were better than analysts were putting out there. They're not growing year over year, right? I mean, they're down tremendously. But what you need to understand is the companies are going to start reporting. Almost every single company, the numbers are either going to get a little bit better or much better because things are getting better with COVID. More things are opening up. And the expectations are still so low, meaning that you're seeing, even with John Deere, a lot of this isn't priced into the market. It might be priced in for the large companies, the Teslas, all the other ones, all the Microsofts, the Fangs, and stuff like that. But when you're looking at the rest of the market, whether it's airlines, whether it's casinos, or worse industries, their numbers are going to keep getting better and better and better and better. And those estimates from analysts are so low, they're going to be very easy to beat. And they're probably going to raise guidance because they're low as well. And it's going to result in most of this market continuing to go higher. Just interesting. John Deere did report a good quarter, much better than expected, but still everything's down year over year across the board, and the stock's at all-time high, which means you're going to see that happen a lot throughout next earnings season. Even the companies that report a little bit after earnings season, which is in the middle, some companies do, like Deere's doing, some of the retailers. But very interesting trend. It suggests that stocks are not done going up. They're probably going to go up higher because estimates are so low, and these companies are easily going to beat as things get better, as the COVID risk declines. I'm Frank Curzio. As always, I'll be back to you guys soon. Take care.